Black screen. A low hum of servers. Slowly, glowing blue lines of code begin to appear across the darkness. The hum grows louder, turning into the sound of billions of trades firing per second. Narrator, calm, serious. In 2010, we saw the first warning. A flash crash that lasted minutes, but shook the entire world. 15 years later, the machines have grown. They've evolved. Faster, smarter, more complex. And now, they don't just trade the market. They are the market. Behind the glass towers of Wall Street, in data centers humming day and night, artificial intelligence tools are making decisions that move trillions of dollars every single day. They read the news. They analyze social media. They predict human behavior before humans even know what they're going to do. But here's the terrifying truth. No one, not regulators, not bankers, not governments, fully understands how these machines work. The code is too complex. The systems are too fast. The decisions are made in microseconds. And if another crash comes, it won't just be a glitch. It could be unstoppable. Fade in. Sweeping drone shot of Manhattan's financial district. Skyscrapers glittering against the night sky. Cut to the interior of a massive data center. Rows of servers blink in unison, cables glowing like veins carrying digital lifeblood. Narrator measured steady. Wall Street has always been a battlefield. But in 2025, the battle no longer takes place between human traders shouting on the floor of the exchange. The battle is silent, invisible, fought by machines. Behind locked doors in New Jersey, Chicago, London, and Hong Kong, servers sit humming 24 hours a day, running AI-driven trading systems so powerful that a single miscalculation can send shockwaves across the globe. The flash crash of 2010 was just a glimpse. Now these machines are not only reacting, they are predicting, learning, and adapting. And their reach extends far beyond stocks and futures. Today, AI tools touch every corner of finance, currencies, bonds, commodities, even crypto. Cut to Goldman Sachs Tower. Pan inside. Engineers working in silence, walls of screens filled with charts and neural network diagrams. Narrator, serious. Goldman Sachs was once famous for having hundreds of traders lining its equity desks. Today, most of those desks are empty, replaced by algorithms overseen by a small team of engineers. What once took 100 human decisions now takes a single AI model a fraction of a second. Citadel Securities, one of the most powerful market makers on Earth, deploys artificial intelligence to manage liquidity across thousands of assets at once. Their systems don't just quote prices. They learn from every trade, adjusting strategies in real time, moving faster than any competitor. And then there's BlackRock. Its platform Aladdin manages over 20 trillion in assets. It scans markets for risks, simulates thousands of financial scenarios, and whispers into the ears of portfolio managers worldwide. Aladdin is not just an AI tool. It is the nervous system of global finance. Cut retail investor at home staring at Robinhood app. Meanwhile, machines and skyscrapers blaze through millions of trades. Narrator, somber. And yet, while these systems operate in silence, the rest of the world lives under their shadow. Retail traders believe they're playing the same game, clicking buy or sell on their phones, setting stop-loss orders, following stock tips online. But they're not playing against other humans anymore. They're playing against machines that already know what they're going to do. Machines that see patterns in their behavior, in their tweets, in their trading history. For the ordinary investor, the game is rigged. The house doesn't just win, it rewrites the rules in real time. Montage, 2012, night capital headlines, traders panicking, footage of stock tickers plunging. Narrator, tense, faster. The risks aren't theoretical. In 2012, Night Capital lost $440 million in just 45 minutes, when a software glitch unleashed chaos. In 2015, exchange-traded funds swung wildly at market open, revealing how fragile liquidity had become. In 2018, the collapse of 14 destroyed billions overnight. Each incident carried the same message: when machines go wrong, they don't just fail quietly, they fail catastrophically. But instead of slowing down, Wall Street accelerated. The logic was simple. Whoever had the fastest, smartest AI would control the market. And in the ruthless world of finance, control means profit. Cut to social media feeds scrolling rapidly. Tweets, Reddit posts, financial news headlines flashing across the screen. Overlay shows neural networks parsing the words in real time. Narrator intense. Today, AI tools don't just read numbers. They read language. When the Federal Reserve releases a statement, AI systems digest it instantly, measuring whether the tone is hawkish or dovish, bullish or bearish. When a CEO speaks on an earnings call, AI models detect confidence, fear, hesitation, and place trades before the human ear has even processed the words. Even social media isn't safe. Millions of tweets, posts, and comments are analyzed every day, hunting for hints of panic or optimism. A rumor, a meme, a viral post, any of it can become fuel for an algorithm that moves billions. The market isn't just reacting to reality anymore. It's reacting to data about reality, and when that data is misread, the consequences can be devastating. Scene shifts, servers glowing red, alarms beeping faintly, charts collapsing on screens. Narrator, grim dramatic. This is the world we live in now. A world where a misplaced phrase in a press release, a sarcastic tweet, or a software glitch could trigger a financial earthquake. The flash crash of 2010 showed us what happens when simple algorithms spiral out of control. The danger today is far greater, because the machines aren't simple anymore. They are complex, they are opaque, and even their creators often don't know exactly how they will behave under pressure. Music fades, leaving a chilling silence. The hum of servers echoes faintly. Narrator, quiet, reflective. Markets are no longer human. They are a mirror of our fears, magnified by machines. And if the wrong spark ignites, the crash that follows may not be measured in minutes, but in days, weeks, or longer. Fade to black. On-screen text. Inside the machine. Fade in. A dimly lit lab, walls lined with glass. Engineers in silence, staring at glowing neural network visualizations projected onto massive screens. The hum of servers blends with faint, tense music. Narrator. Calm, serious. Step inside the secret labs of Wall Street, and you'll find something far different from the shouting trading pits of old. Gone are the men waving tickets, barking orders. In their place are engineers, coders, mathematicians, and data scientists, building algorithms that will decide the fate of global markets. These are not traders. They don't wear suits. They wear hoodies, headphones, and badges. Their battlefield isn't the exchange floor. It's lines of code trained on oceans of data. Cut to close-ups of engineers writing code, servers blinking, digital graphs pulsing with AI predictions. Narrator, steady, explanatory. Each day, terabytes of information flow into these systems. Stock prices, futures data, options chains, interest rate movements, news feeds, even the emotional tone of social media. The algorithms consume it all. They don't sleep, they don't rest, they learn. In this world, milliseconds are lifetimes. Whoever can train the fastest model, execute the quickest trade, detect the smallest anomaly, that firm gains the edge. And in finance, the edge is everything. Citadel spends billions on data infrastructure. BlackRock's Aladdin platform scans entire economies in real time. Goldman Sachs employs teams of quants whose sole purpose is to refine AI systems that can adapt faster than the competition. Scene shifts, footage of neural networks glowing, simulation dashboards running thousands of financial scenarios at once. Narrator, firm, intense. These AI systems don't just execute trades, they simulate possible futures. They run millions of scenarios. What happens if the Federal Reserve raises rates? What if oil drops $20 overnight? What if a political crisis erupts in Europe? The machines calculate, adjust, prepare. And when the event comes, they react instantly, without hesitation. But here's the problem. Sometimes the event they prepared for never comes. Sometimes the data they train on is flawed. Sometimes the pattern they think they see is an illusion. And when AI acts on an illusion, the results can ripple across the entire market. Cut, archival headlines of Knight Capital 14 collapse, 2015 ETF flash. Narrator, dark, reflective. We've seen this before. Knight Capital's systems bought and sold stocks in madness until humans finally pulled the plug. Too late. The 14 product collapsed because automated hedges amplified the risk instead of containing it. In each case, the machines didn't make a mistake because they were broken. They made a mistake because they were following their programming perfectly, just in a world too complex for their logic. That's the paradox of AI in finance. The more advanced it becomes, the less predictable it is, and unpredictability is the enemy of stability. Scene, glowing LLM interface on a trading terminal, summarizing a Federal Reserve speech instantly. A human analyst watches in awe. Narrator, intense, measured. Now in 2025, the newest frontier is language. Large language models, like the ones revolutionizing industries everywhere, have found a home on Wall Street. They read earnings calls. They summarize SEC filings. They analyze the words of central bankers. In seconds, they translate language into signals. Buy, sell, hold. But language is tricky, a misplaced phrase, a sarcastic remark, a translation error. To a human, it's obvious. To a machine, it can be a signal worth billions. And when one AI misinterprets a word, others react to its trades, creating cascades that no regulator can anticipate. Cut, charts flashing red, AI dashboards glowing, headlines scrolling, narrator, grim, fast-paced. The speed is terrifying. Imagine, the chair of the Federal Reserve says one sentence slightly differently than expected. Before journalists tweet about it, before anchors report it, before investors can react. AI tools have already bought and sold billions in assets. The market moves not on human understanding, but on machine interpretation. And when the machines are wrong, the consequences are instant. Scene changes. Empty exchange floor, voices echo faintly. Overlay text. Feedback loops. Narrator, serious. Markets were once governed by human judgment, tempered by emotion, slowed by hesitation. AI has no hesitation, no fear, no pause. One algorithm's action triggers another. A feedback loop begins. Liquidity evaporates. Prices spiral. It's the flash crash all over again. But this time, amplified by artificial intelligence more powerful than anything we've seen before. Music swells, the hum of servers grows louder, screens flash red. Narrator, final line of section 2. We thought we built machines to serve the market, but in reality, the market now serves the machines. And the question we must ask is simple. What happens when those machines decide to fail? Fade to black, on-screen text, the hidden risks. Fade in, aerial shot of the New York Stock Exchange, slowly dissolving into a digital wireframe grid. The hum of servers grows louder, mixed with faint heartbeats, as if the market itself were alive. Narrator, calm reflective. The flash crash was a glimpse. Night Capital was a warning. The Croatian collapse was another. Each event was dismissed as a glitch, an error, a rare anomaly. But what if they weren't anomalies at all? What if they were previews of what's coming next? Cut. Stock charts collapsing in fast motion, then rewinding back. Overlays of dates, 2010, 2012, 2015, 2018, 2020. Narrator, steady, analytical. Every one of these incidents revealed the same truth. The market is fragile. And that fragility grows with complexity. Today, AI tools trade not just stocks, but bonds, futures, currencies, crypto, and derivatives all at once. A shock in one market doesn't stay contained. It spreads like lightning, amplified by algorithms that connect every corner of the financial system. A sell-off in oil triggers a ripple in currencies. That ripple shakes bonds. Bonds spook equities. Equities rattle derivatives. And within minutes, the tremor becomes an earthquake. Scene. Footage of traders watching helplessly, hands on their heads. Then cut to retail investors staring at their phone screens, stop-loss orders triggering. Narrator, somber. And when the machines decide to move, ordinary investors are left powerless. Their stop-losses trigger at the worst possible prices. Their portfolios are whiplashed by movements no human could predict. For the average person, the market seems like chaos. But to the machines, it is order. An order written in code, executed at speeds too fast for human eyes. Montage. AI models glowing. Dashboards simulating crises, maps of the world with red shockwaves spreading. Narrator, tense rising. Now imagine this. A Federal Reserve statement misread by an AI. A viral rumor spreading on social media. A glitch in a major hedge fund's risk model. Each one seems small, but in a market run by machines, small sparks ignite massive fires. And this time, the fire might not burn out in 20 minutes. What happens if the next crash lasts hours? Days? Weeks? What happens when confidence is lost? Not just in a stock or an index, but in the system itself. Scene. Slow motion shot of empty grocery stores, ATM lines. People watching breaking news of a market meltdown. Narrator. Dark, chilling. The stock market is not just numbers on a screen. It's the backbone of the global economy. Pension funds, retirement savings, government budgets, they all depend on stability. If AI triggers a prolonged collapse, the consequences will reach far beyond Wall Street. Jobs, housing, food. The real economy will feel the shock. And unlike 2010, there may be no quick rebound. Cut to regulators in hearings, senators questioning experts, news anchors debating AI risks. Narrator, serious questioning. Regulators promise safeguards, circuit breakers, new rules, tighter oversight. But the reality is simple. The machines are too fast, too complex, too widespread. By the time a regulator even notices, the damage has already been done. And here's the most terrifying part. Many of these AI systems are black boxes. Even their creators don't fully understand how they make decisions. We've built a financial system controlled by intelligence we can't explain. Scene shifts, humanoid AI face glowing, data streams flowing into its eyes. Overlay text. The market belongs to the machines. Narrator, grim final rise. Humans still believe they're in charge. They still ring the opening bell. They still speak of strategy, vision, control. But the truth is undeniable. The heartbeat of global finance now belongs to AI. And if that heartbeat falters, the world will learn what it truly means to surrender control to machines. Music swells to a peak, then cuts suddenly to silence. Black screen. Text fades in. Part 2. End. Narrator. Quiet, chilling outro. This was part 2 of our journey. You've seen how AI has grown from a glitch in 2010 to the hidden master of global finance in 2025. But the story isn't over. In the final chapter, we'll uncover the most dangerous truth of all. What happens when AI doesn't just crash the market by accident, but manipulates it on purpose? Subscribe now because the ending is darker than you imagine. Fade out. End screen. Subscribe Plus coming soon. The final chapter.